Hey, what's going on, everybody? Today we're talking C3.ai, ticker symbol AI. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. I'm going to drop you into a few different news clippings and articles surrounding the company as of recently. We're going to hear from the CEO of C3.ai, and then we're going to take a look at the stock. Thank you for your time. Please continue to like, share, and subscribe. Please enjoy.
When CRM was invented in the 1990s, it revolutionized sales, marketing, and customer service. CRM systems today unify manual data to manage customer-facing operations. While these inputs are sufficient to provide a system of record, they are insufficient to do AI-based CRM. If we want to unlock AI-based use cases across sales, service, and marketing, you need a much more robust set of data. For example, to do meaningful AI in financial services, in addition to traditional CRM data, you need economic data, equity prices, historical transactions, credit scores, along with third-party information such as LinkedIn relationships, SEC reporting, and more. With this data, you can build machine learning models that solve classes of problems in CRM that were previously unsolvable, and this is the future across all industries. C3.ai, Microsoft, and Adobe have partnered to deliver the next generation of CRM that makes this a reality. C3.ai CRM combines the full power of the Microsoft Dynamics 365 CRM suite with the marketing automation solutions of Adobe and the rich enterprise AI capabilities of C3.ai, delivering the world's only AI-first CRM solution built for industries that uses data available across all internal and external systems. Take, for example, precision sales forecasting. The application uses artificial intelligence to predict sales forecasts, advise where risks and opportunities are, and prescribe what can be done to proactively address them, based on all available customer and operational data, not just what is in the CRM system. And sales forecasting is just one of many workflows that C3.ai CRM transforms. Others include churn management, recommended offers, and lead scoring. Built with modern AI-first architecture, C3.ai CRM for Industries enables a new generation of customer-focused industry AI use cases and extensible workflows, so that each industry can meet the needs specific to their business and deliver superior value. Reinvent your CRM today with C3.ai CRM.
Okay, I'm here on Seeking Alpha at the C3.ai page. I have it linked up to my portfolio, and since I have opened up a position with C3, I always find it useful to use Seeking Alpha in attaching with my portfolio. It just lets me know everything that I really need to know that's going on with the company. So as we look here in the past month, it's been moving downwards, and this move has been expected, at least among some peers. But I do think that the future, if you're looking for a long-term hold, I believe that this type of enterprise company is one to hold, and I don't see where the price should. I mean, it is overvalued. Let's just be honest, right? It's overpriced. But if we can take a look here at what their revenue is projected, in 2021, we're looking for a 41 million, roughly around 41.3 million dollars worth of revenue in the Q3. This year, we're looking for around 47, and it just continues to grow. At least that's what the estimate of the revenue is looking forward to. If we look real quick here at the 2020 revenue, just looking back, it was approaching 40, so we can see here a little bit of some growth. The earnings per share, this type of movement, as it's still in the negative, I'm okay with that. You know, my risk tolerance is up there, so I don't mind it. Of course, I would prefer to see the earnings per share in the green and the positive, and I rather see it that way. But of course, it doesn't detract from my vision with the company and as I see it in the future. I'm gonna also take a look real quick here. The market cap's at 12 billion. It only continues to grow. The ownership, public and other sectors really own the majority of it. Institutional wise, it's not held very much so, but I don't mind it. The insiders and individuals, I do like that it has around 28, close to 30% holdings of the insiders. I like to see that with a company that I'm investing into. And if we look here, just some of the other companies, the peers, Pegasystems, OpenText, Five9, Dynatrace, all very, very solid companies. So I just wanted to highlight as well, and we're going to take a quick look at 3M. And I also hold 3M in my long-term passive portfolio. And the reason why I wanted to showcase this company, if you're not aware of 3M, there's nothing wrong with that, obviously. But this is a very solid company to invest in my opinion. And just the dividends are just it's held in a lot of passive dividend portfolios amongst peers. So let's just take a quick look at how C3.ai partners with 3M and is utilized with such a great company.
With the right partners across the board that really enable us to make longer-term strategy around how to deploy ML and AI across our enterprise.
We've been engaged with the C3 team in a couple different areas. One, internally, figuring out better processes. How do we actually think through from a manufacturing and supply chain standpoint? How do we use intelligence to optimize inventory?
On the one hand, it very much is about dollars and ROI. On the other hand, we're really focused on customer satisfaction and improving customer satisfaction. So it's really marrying those two things together that I think is going to show the power of the tool set that we're deploying.
We have thousands of legacy systems. We've been on a almost 10-year journey to go to a global enterprise ERP, and the C3 platform helps us organize and ingest that data in a reasonable, trusted way that we can then build applications off of.
The biggest challenges around data is actually ingestion of data. The robustness of the platform was extremely helpful from that perspective.
The speed at which we've been able to work with C3 is, I think, due to a couple of different things. One is the way that the technology has seamlessly worked in our instances on our cloud providers. Another reason is that working with the C3 team, we've been able to stay incredibly focused on what our goal and our business objective is.
The basic approach of really teaching us how to fish ourselves, and then the initial training to get our team up and running and able to operate on our own is really, in the end, what's going to make us successful.
Okay, so let's take a quick look at this article from Investor Plates. Consider C3.ai stock a buy as this overlooked IPO has potential. So in a little bit, we're going to hear from Tom Seibel, the CEO of C3, and we're going to also jump into the stock. But I just wanted to highlight this article as it's showing some sentiment as a buy. We're not going to go through the entire article, but let's just take a quick look right here. At the time when I became aware of this company in its earlier years, it was catering to the energy space, helping deliver efficiencies and cost savings. Fast forward to 2021, and Seibel, who's still the CEO, I love founder-led companies, and it's clear that the rest of the market has picked up on this whole AI thing, right? So the article shows sentiment for a CEO who founded and is still running it, as do I. So, jump in here real quick. So, the first line is so important in terms of generating strong recurring revenue, which is where the stock's premium comes into play. When we're dealing with tech stocks, it supports the value chain in any industry. That's going to make C3.ai a mainstay in the tech field, and in all honesty, I wouldn't be surprised if it's acquired someday. So the author of this article thinks that C3.ai will be picked up perhaps by a much bigger company. But I do see that since the IPO, right, the pricing was, just kind of all over the place. So let's continue on with the article. The company's IPO pricing climbed several times, and even though it opened at $100, it has kept on going. AI stock sports a 52-week high of $183.90 in the 130s now. Shares are down about 25% from its highs, so there is an opportunity here for bulls that have a long-term time horizon. So the analyst expects roughly 33% revenue growth this year and an acceleration of up to 35% next year. And its current price, that leaves shares trading at more than 52 times forward revenue. So what that really means is that the price perhaps is a little ahead of itself, but if it's pricing in the future, then this time next year perhaps we see a little bit of a bump. But as I'm seeing it, anytime that there's a dip, that it's a great buying opportunity, and I believe that the stock is trying to find its legs, but we'll jump into the stock in just a moment. Let's take a quick look and listen to what Chamath Palihapitiya has to say about enterprise companies. Not exactly, he's not talking about C3.ai here, but he is talking about enterprise companies, which C3.ai happens to be. I know that it's an artificial intelligence company, but it's still an enterprise company. It moves in that way. So let's hear what he has to say regarding enterprise companies.
Obviously talk a lot about these hot new IPOs coming to market, valuations. Some suggest some are getting a little over their skis, the way that these numbers have been pushed up. Do you agree with that? You look at all of these that have come out recently.
So look, another big reason why I took a step back from the traditional investing game is that game is in part rigged, but it's also in part fundamentally broken. Why? Because as you raise more and more funds with the goal of just generating fees, you need to allocate those into companies that are seemingly reasonable, where you won't lose your job. What that's resulted over the last 5 years is an enormous glut of money that has gone into enterprise software businesses. Why? Because there isn't this binary product market fit risk bet. There's some revenue. You're selling a product to a customer who's willing to pay for it. But the dirty underbelly of all enterprise businesses is that you spend an enormous amount of money on sales and marketing. So much so that right now most of those companies have no line of sight to being profitable, and some of those companies are actually gross margin negative. And they're all raising capital from venture capitalists on the back of this idea of growth. Now, I look at that and I say to myself, all of these venture investors are telling me that because they like enterprise, I actually should take a step back. When they are greedy, I am fearful. I particularly don't like the enterprise space, X of Slack and probably Zoom. And there's maybe a handful of others around the edges. But beyond that, I would not put a single dollar in enterprise. It is overbuilt, it's overinvested, they're highly, highly unprofitable, and the real winner is Facebook, Google, Amazon, and Microsoft. So from my perspective, the actual companies of value right now are consumer. Look at the multiples of Facebook for the amount of cash they generate. Look at the multiples of Google. Look at Amazon themselves. Those are incredible businesses that you can own, which are much, much better bets.
Well, you're describing sort of obviously well-established and thriving businesses. I'm somewhat surprised to hear you say that the enterprise side is the one that's overvalued, whereas the consumer side looks reasonably valued, when a lot of the consumer companies are not profitable and have no roadmap really to profitability.
I think the conventional wisdom there is a little misset. Again, I think that right now investors have a tendency to be late to the party. And when the music is on, as my friend Bill Gurley says, they love to dance. And right now, the enterprise world is the one where investors can look smart enough to their LPs to raise subsequent funds, which is really a backdoor mechanism to just generate more fees and pay themselves a salary. And so enterprise as a class is very challenged. There are a few, like Slack, which are exemplary, but most we will find are incredibly overbuilt, overstaffed, very difficult to get to long-term sustainable profitability without being acquired by the big stalwart enterprise companies.
And newsflash, Slack was acquired by Salesforce. So again, the reason why I wanted to showcase Chamath is because I appreciate the man. I appreciate what he stands for, and I can appreciate as much as I can learn from him. So I just wanted to showcase that, what somebody like himself is talking about these companies. And since C3.ai's IPO, which in my opinion, I think that it was crazy how it shot up like that. But I'm not surprised. Nothing surprises me in the market. However, I want to be a part of it, so therefore I am an AI bull. I think that it's safe to say that we can appreciate more listening from Tom Seibel.
Tom, what's your reaction? You're certainly not the only big company to get out of the gate today. What's your reaction to investor sentiment here?
Well, I think it was, we were very pleased by the investor response to what we do. And, very pleased, on behalf of all the employees of C3. I think they should be, very proud of what they've accomplished.
When you see your shares doubling, do you have any regret there? Do you think the shares were underpriced or that you left too much money on the table?
Emily, the behavior of equity markets is just outside of my league. I really have no idea there. I am, to the extent that I have skills, it's in building and operating rapidly growing software companies. And so I stick to what I know about, and equity markets are just way beyond me.
So let's talk about what you do know about. You've been in this industry in Silicon Valley building companies for a long time. You're taking on giants like Salesforce, which just did a massive deal with Slack. What do you think you have on the competition?
Well, I'm not aware that we compete with Salesforce. We're in the enterprise application software business. We're building large-scale enterprise AI applications, and most of our customers are organizations that are, if they were not to use our platform, they would be building it themselves. Now, many of our customers, there is a void in the market, in the CRM market. So many of our largest customers of Siebel and Microsoft are asking that we provide fully AI-enabled CRM solutions. So Microsoft and C3 have entered into an agreement to provide those solutions. So there's kind of a vacuum in the market there that we're going to fill. I don't think we'll compete with Salesforce there. They're not really, to my knowledge, they're not in that space.
Okay, so it's always important to listen to the CEO, in my opinion. It helps me wrap my head around the vision for the company. So let's take a look at my trading view. This is the 1 month trading window of C3.ai. I'm making a line of resistance here in the 135 area, so the mid 130s. If it can pop through this, and the reason why I made this level of resistance, because it had traded there prior and it had become a level of support, and then it had sunk below it. So it's still very early. I believe that the stock is trying to find its legs. So let's just play out a few different scenarios that if it can use the last week, the last couple trading sessions, if it can use some levels of support, again, anything can happen. However, if it can find some support and if it can trade off of these levels of action, and if it can break through that 135 level, anytime that it's below it, I see it as a great buying opportunity. But if it continues to travel upward and then it finds a level of support there in the mid 130s, then I think that it will continue to ascend. So let's also play out this scenario here where I'll make a trend line from the last couple trading sessions, and that if it finds an upward moving price action, then I can see that the price will fluctuate. Then if it is anywhere below this trend line, I see it as great buying opportunities. Again, it's trading very, very high. So, proceed with caution with this type of company. It's just trying to find its legs. So I don't think that there's anything wrong with opening up a position. However, you want to play it smart. You want to find a good entry. And as I see it, this company is like it picks and shovels for 3M. It's partnering up with Microsoft and all the rest of its partners. So it's pretty legit, in my opinion. Okay, I'm going to leave it here. I want to thank you for your time. I really do appreciate it. Please continue to hit that like, share, and subscribe button. It really helps the channel. It helps people find my content. If there's another company, ETF, or an IPO that you'd like to see me research, just drop it in the comment section below, and I will do my best to get to it as soon as possible. Okay, thank y'all very much. I will see y'all in the next video. Take care.